You need to have your portfolio set up in a much different way than if prices were to go down or stay the same over the next 10 to 15 years.
The reason I call it fake money is the more the Fed prints money, the rich get richer. We have asset inflation right now. We have asset inflation in the stock market, bond market, real estate market. I mean, it's feeding the rich. So UBI, MMT, quantitative easing, making the rich richer. Unfortunately, the middle class will pay higher taxes because the rich don't pay taxes. But what it does, when you have universal basic income and MMT, the poor get poorer. So if you're a poor person, you can't afford a house now because the real estate prices are so high. And if you have universal basic income, I don't think a bank will touch you, if you want to buy real estate.
Yeah. It's like what was it in the Roman days, the bread and circus? It seems like it's the same thing today with these stimulus checks and the UBIs, that people are getting a couple bucks in the mail and they're thinking that's fantastic. While at the same time, they're not realizing that they're being priced out of every single asset denominated in dollars. And if they do try to buy a house, or if they do try to invest in stocks or bonds, and if they don't know what they're doing, they're going to get steamrolled because everything is in a bubble thanks to the Fed, the money printing, the artificially low interest rates.
And UBI will accelerate it.
That's right.
It'll make the bubble so big, it turns into a mania. There's capital gains and there's cash flow. And you got to know what you're going for. So in real estate or in stocks or in bonds, people most of the time are going for capital gains. So when a person flips a house, they're going to buy it for 100, goes to 200, they're going to net 100. But the trouble with capital gains is you pay tax on it. But the other part, there's always a boom and a bust. And I'm predicting the biggest bust in world history is coming. So it's going to be the biggest opportunity of all times because, Kim and I made our fortunes in 2008 because, we had apartment houses and our tenants were leaving to buy their houses they couldn't afford. I mean, there was a thing called a ninja loan, no income, no job. Okay, so there's booms, busts, capital gains, cash flow. And there's a thing called, there's always the opposite. I was at the gym just now, and before everybody came out, I said, I felt for this guy. He says, I've been a bus driver for 40 years. I'm going to retire, and I can't wait. He's turned 65. I said, what do you got? He said, I got a 401k. I said, what's it filled with? He says, I just sold all my stocks at the top of the market. Then I went into bonds. George, what did he just do?
The most stupid thing he could possibly have done. First of all, you should never put all your eggs in one basket, but especially not the bond market right now with all the money printing that you referred to earlier. Robert, before you said you think the market is going to crash. So whether that's the stock market, real estate market, the question is, does it crash in nominal terms or adjusted for inflation? See, the stock market can stay the same as it is right now, but if we get 10% inflation because of all the money printing, you'll actually lose purchasing power. You see? So the market can crash up just as easy as it can crash down if your definition of a crash is losing purchasing power. So if you're someone that believes, like I do, that once the Fed starts printing all this money, the government prints all this money with stimulus and whatnot, they cannot stop. It's like a heroin addict. The only thing they can do is print more and more and more. And if they can't reverse course, then you need to start thinking through your portfolio in terms of hard assets.
Correct.
Something tangible.
Well, I'm an entrepreneur, but if the crash wipes out your business, you have no cash flow. And what happened when COVID hit for Kim and myself, cash flow went up, because the market was demanding more financial education. It's always going up and down, in and out. And that's what investing is. You have the capital gains, cash flow, boom, bust, liquidity, all this stuff. And that's what financial education is. It's not this poor guy who says, I have a 401k and I was told to sell all my stocks and get into the bond market. Now, George, would you explain why you said that is the most stupid thing you could do?
Because you're getting a future stream of dollars. That's all a bond is. You're buying a bond for $1,000 and they're saying, okay, in 10 years, we're going to give you $1,000 back. And along the way, we'll pay you a little bit of interest. I mean, it's negligible at best. So what happens if we have a high rate of inflation because of the money printing? You're going to get paid that $1,000 back, but it's going to buy you a loaf of bread. So you don't get back your purchasing power. You only get back your dollars.
See, when I look at this stuff, I'm looking at the relationship between equities or stocks and bonds. And so the reason the stock market went up is they kept dropping the interest rates on the bonds. So, when I started off, interest rates were about 16%. Right. So if I had a bond, I was getting 16% interest. That was a very valuable bond. If they dropped the interest rate to 14%, my 16% bond was more valuable. That makes sense. It's like my cash flow from the bond or the dividend was good. And so when the market kept crashing, they dropped it to 8. And today, I think it's about 2.5 on the long bond. So as to keep the stock market up, they had to keep dropping the bond prices down. And now we're at zero. They call it the zero bound.
Yeah.
And that's where Japan is.
Yeah, for a long time.
If they can't keep dropping that bond price, the stock market comes down. So that's the correlation between equities, stocks, and bonds. So this is my question, George. So let's say today, bonds are 2%. What happens if it goes to 5%? Because inflation comes in, they have to raise the bond rate to 5%. What happens to the 2-year bond? Bonds and stocks are liquid. Real estate's not. So it's like that guy buying a bond at 2%. Nobody wants it if it's 5%. So if you buy a piece of real estate, let's say in Dallas, Texas, and suddenly the prices drop, it's hard to get out of that debt on that real estate because it's not liquid. Yeah. So the good thing about the bond, he can dump it and take his loss now. But real estate is illiquid.
Yeah.
And that's why we highly suggest investing in financial education, because it's not an answer to it. It's a process. And my concern is, and I'm not saying don't buy, like I was just in Texas, it's a mania because everybody's running out of California and New York, wherever they're running from. And everybody wants to get out of the cities. So they want a piece of the country. So land prices spiked. Now, is that good or bad? So I'm asked this question, okay, everything went up, everything's inflated. So I made my fortune because I just rode the ship going up, as it was a great time to get rich. But this is 2020, it's different now. So everything is now going to start coming down. Now, when I was in school, in high school, nobody touched stocks. The only thing people bought were bonds. Only people that bought stocks were gamblers. Nobody bought real estate. They bought a house, but there was not much real estate investing in commercial, at least. So I went in, since I played Monopoly as a young boy, I went into investing in real estate. The reason I like real estate is because I can use debt. Debt is tax-free money. I know everybody says get out of debt, but you have to know what you're doing. I don't recommend it, but I borrow as much as I like because it's tax-free. Let's say I borrow $1 million. It's a tax-free $1 million. If I had to work for $1 million, it cost me $2 million because I had to pay the taxes on it. So debt is tax-free money, and with that, I buy real estate. But everything has gone up. And today I'm a little spooked because the last deal that Ken McElroy and I worked on, it was a $30 million property. And because people are so desperate for anything, so the bidding started, it went to 32 million, and we stayed in at 32 million. Then it hit 34 million, and at that point we got out. It didn't make sense at 34 million, and the property ultimately sold for 36 million. That's a bubble. It doesn't make sense. So unless you have an infinite money machine, like a lot of people do, you can stay in there. But we don't. We have to pay that money back. So anyway, just be patient. Prices of gold, silver, and Bitcoin will crash too. The reason is when markets crash, whether it's stocks, real estate, we call that bonds, people need cash. And so when the markets crash, they have to go to cash. and they'll sell whatever is most liquid. That's the key word. So what gold, silver, and Bitcoin are is liquid, so they'll sell that off too. Now that's bad news if you're holding it long, but it's good news if you're buying more of it. So every crash, it'll come down. And if you're long, if you actually are confident that the government's going to keep screwing up, the government's going to keep printing more and more money, which they will when the pensions go broke, just keep, every time it drops, buy more gold, silver, and Bitcoin. And for most people, silver is the most affordable today. It's also the most volatile. If you can afford $20,000 Bitcoin, buy it. You can afford $2,000 gold, buy it. And if you can't, buy silver. Anyway, there's massive money printing ahead because the US government is in serious financial trouble. Like the debt to, there's two guys, a man and a woman, called Rogoff and Reinhardt. They said when the debt to GDP ratio hits 90%, it's aloha. You've gone too far. You know, that'd be like you making, you know, $10,000 a month, but $9,000 is being paid to debt. What that means is the US government has to print more fake money. So every time, since I know the long trend is they're going to print more money, I'll buy gold, silver, and Bitcoin all day long because our US government is screwed up. So the time to buy more gold, silver, and Bitcoin is coming. But the reason I like gold, silver, and Bitcoin, it's outside the system. It's out of reach of the US government and the US Treasury and things like this. So I love this stuff. I just simply do not trust my government.
So there, Kiyosaki explains that in the event of a market crash, investors will flee to cash, selling off any liquid assets they have. As gold, silver, and especially Bitcoin are liquid, the prices of these too will collapse. As he states, if you are long on these assets, it would be a huge buying opportunity. Now, in this clip, Kiyosaki speaks on the effect money printing and stimulus responses will have on real estate, millennials, and what the only solution is for investors.
So there's all kinds of things going on in real estate today, but it'll eventually crash simply because the government is making it so expensive to build a house. So, you know, I'm going, this is so screwed up. But that's what happens when the government steps in and they kick capitalists out, and then the socialists kick in. But anyway, that's why savers are losers today. So we have the Fed just announced they're going to keep interest rates low for about 5 more years. Well, that means my generation, we're screwed because Wells Fargo is not going to pay dividends anymore. For pensions to operate, they need about a 7% return. And because they suppressed the interest rates, just like they suppressed COVID, what a fake that was, but they suppressed interest rates and they suppressed COVID, it kills everybody. It's killing everybody. So for the young at heart and all this, the way out of this is to be an entrepreneur. You see, I don't need the stock market to make money. And I really don't need the real estate market to make money because I already bought my property long ago. So it's just cash coming in. But the real advantageous thing here is this little cell phone. But, you know, we can take ideas like books and games and things like this and create our own, and this ships it out to the world. So all I'm saying here is what your mommy and daddy told you is go to school, get a job, work hard, save money, get out of debt, and buy a house, and invest in the stock market for the future. It's going to wipe them out. It's old ideas. You need new ideas.